and welcome to another edition of Capital Market Live on Channels Television. I'm Will Ibang. Let's take a look at how your local investment fared this week. But first, let's take a sneak peek outside Nigeria. We begin with Europe. We see Europe markets retreated in late deals, leaving the stock 600 index at 0.04% loss. For the session, healthcare and technology stocks dragged on Friday, both down around 0.6%, while oil and gas gained 0.66%. Now, that was despite some strong performers at the top end of the index, including defense firms, SAB, up 16% on better-than-expected results, and Investors Wind up 15% after it announced a new U.S. contract. An analyst at JP Morgan upgraded the stock to overweight from neutral. Let's now head to Asia markets, which ended the trading week mixed. South Korea's Kospi lost 0.13% to end the trading day at 3,118.07 points, and the small cap Kosdaq ended 0.29% to 820.67. Australia's S&P ASX 200 jumped 1.37% to close at 8,757. That's a record high. Japan's benchmark Nikkei 225 slipped 0.21% to 39,819.11, while the Topix lost 0.19% to 2,834. Mainland China's Shanghai ended the day 0.5% higher. And let's look at how the Dow Jones Industrial Average ended in the U.S. We see it sliding on Friday after President Donald Trump reportedly pushed for greater tariffs on the European Index Union. We saw the 30 stock Dow falling 1.42%. 1.42 points rather, that's 0.32%, settling at 44,342. The S&P 500 lost 0.01% after hitting a record high earlier in the day, now ultimately closing at 6,296.79. The Nasdaq Composite, we see that adding 0.05%, ending at 20,895.66. And let's now come back home, the domestic equities market. We begin with the unlisted markets. As the NASD, we see that index rising 1.62% to end the week, with the market capitalization steady at 2.04 trillion naira. Trading activity, we see it surging as volume jumped 498% to 127.39 million, and value rose 198% to 434.56 million naira across 78 deals. Top gainers, let's look at that, included Central Securities Clearing System, Food Concept, and Okitipupa Oil Palm PLC, while Akon Petroleum PLC was the top decliner, shedding 9.77%. Most traded stocks were Okitipupa Oil Palm. We see that Friesland Campina Wamco and Central Securities Clearing System PLC, and that reflected strong investor focus on key blue chip and financial assets. Let's slide now to the NGX, where we see the all-share index rose and continued its bullish territory for the week, up again over 4% to 131,585.66 points, while market cap gained 3.4 trillion naira to hit 83.25 trillion naira. That's the overall market cap. The rally, trading volume and value, we see that increasing, showing big investor sentiment with more deals this week. Industrials led sector gains up 19.17%, huge one, massive, followed by banking up 5.36%. The laggard for the week is the oil and gas and the insurance counter, with the likes of Universal Insurance, Consolidated Hallmark Insurance PLC down for the week. Now let's look at top trades for the equities. We see FirstHoldco PLC, FCMB Group, and Fidelity Bank showing strong investor interest throughout the week for financial stocks. But let's look at other news that made, other stories that made the news this week. You see the federal government and billionaire businessman Femi Otedola have jointly dismissed claims they were involved in a massive 323 billion naira share acquisition in FBN Holdings as FirstHoldco. According to the federal government, as the official statements which was issued yesterday, July the 18th, 2025, neither Femi Otedola, who serves as FirstHoldco chairman, nor any of the federal agencies participated in the purchase of approximately 10.43 billion shares in the holding company. FirstHoldco clarified that RC Investment Management Limited was the sole buyer, while the Attorney General's office condemned circulating reports about government ownership as inaccurate, misleading, resentful, and malicious. The clarifications aim to dispel widespread speculation stemming from media suggestions that FirstHoldco shares had been transferred to a government trust. Let's look at what other stories we have there for the week. The Asset Management Corporation of Nigeria, AMCON, has sold about 1.14 billion shares of Fidelity Bank PLC in a large off-market block deal executed over 9 deals, and this signaled a noteworthy shift in the bank's ownership dynamics. We'll be looking at that same report, because this has not been confirmed yet. Of the sale was facilitated by Apple Asset Management Limited and Cardinal Stone Securities, with industry insiders identifying a prominent Niger Delta-based oil and a security magnate as the buyer. AMCON's move reflects its ongoing strategy to divest equity stakes acquired during Nigeria's 2009 banking crisis, prompting analysts to anticipate a potential strategic realignment at the Tier 2 bank. Now, the Nigerian exchange has revealed that over 4.63 trillion was raised during the first half of 2025 through a blend of corporate and sovereign financial instruments listed on its platform. And this record-breaking mobilization, boasted by the NGX Invest digital platform, launched in 2024, has been instrumental in driving infrastructure projects, funding enterprise expansion and innovation, including fueling more than 2 trillion naira towards banking sector recapitalization. Under the leadership of the CEO, Femi, NGX attributes its strong performance to structural reforms, enhanced regulatory collaboration, and a more transparent investment landscape. As a result, total market capitalization surged by 16% to reach 126.7 trillion naira, with equities, fixed income, and ETFs all posting notable gains. Before we delve into the markets, what's happening in off-market deals and the rest of them, let's check in what's happened with GTCO. This week, we see the Guarantee Trust Holding Company made history on July the 16th this year, becoming the first banking stock to surpass the 100 naira mark on the Nigerian exchange, peaking around 101 mid-session. This milestone, we see it reflecting a broader rally in Nigerian banking stocks as the NGX banking index surged over 22% in July. The momentum is fueled by GTCO's successful dual listing, 2.29 billion shares on the London Stock Exchange. That was in July the 9th, and we see 2.28 billion on the NGX, that's July the 10th, as well as the bank's strong first quarter 2025 earnings and robust investor sentiment. Now let's go straight to how this is influencing and impacting investor sentiment in the market, and we have to deal with this to discuss all this. Mr. Tunde Amolegbe is the MD and CEO of Savings Asset Management. Good to have you join us this evening, sir.
Pleasure is my will. Thank you.
So we've just a lot of interesting things happened in the market this week. I'm sure you're pretty much excited and sitting on the edge of your seat. I'm sure that this week was more like you're sitting on your toes, wondering what's going to happen next, especially with GTCO. We saw the markets rallying, banking stocks. Everyone was wondering where the direction was going and what was happening, but I'm sure you're going to throw more light on that. But something significant happened this week as well. We saw some off-market deals. First with FirstHoldco, and then we're hearing news about AMCON selling shares in Fidelity Bank, still in the off-market deal. Is this a common trend? Is it a common phenomenon in the market? And also, is this something we should be expecting? Is it a trend we should be seeing in the next couple of weeks to come, or is this a trend that's come to stay in the market?
Yeah, well, I mean, off-market deals are normal. They're a regular part of the market, and it's a platform that the NGX has created to enable bulk trades to happen without they necessarily disrupting the market dynamics. You know, the regular retail trades, 100,000 or 500,000, a million, are the ones that typically go through the market on a regular day. But of course, we do have situations where bulk trades needs to happen. And typically, those bulk trades, by their nature, do not, I will say, happen at the regular prices that retail trades go through in the market. And so you need to have a platform that enables those trades go through without necessarily disrupting the market dynamics in terms of flow and in terms of pricing. Because the prices those off-market trades are done are typically different from the prices the regular retail trades will be done. So you need to have a platform that enables those trades to flow through without disrupting the regular flow. And that's why we have that platform that enables the buyers and the sellers on both sides to come in do those trades on a one-off basis, and then allow the market to continue its regular rhythm.
Okay, so talking about disruption, this one seems to have disrupted markets a little bit because we saw the news, or we saw this counter rebuttals, and we didn't do it, we did it. We saw FirstHoldco. Let's start with that. Let's kick off with that. We see Femi Otedola denying jointly with the federal government that they had no involvement in the over 300, we saw that billion shares being, sold, the amount, 10 billion, over 10 billion shares that were sold, amounting to over 300 billion naira. I want to just know, what do you think about this rebuttal now? Did that deal happen or did it not happen? Did it happen or did it not happen? And if it did happen, why the disruption in the markets?
Okay. Firstly, the deal did happen. It actually did happen because it was announced by the trading platform, that's the NGX, so it's confirmed that the deal actually happened. The parties, i.e. the stockbrokers that consummated the deal on both the buying and the selling side, were announced, and the quantity was also announced. So it's confirmed, it's sealed, the deal happened. Now, regarding who is on the buying hand and who is on the selling hand, I guess that is where the complications regarding stories and rebuttals had to come in. And as operators, we can only rely on what is official. And really, what is official is the communication by the bank itself to say that this is the person that bought, and this is the quantity of shares that was bought, and at this particular trade. Now, all the other stories around it as to whether the federal government is involved or Mr. Otedola is involved, really we can't delve into that. We can only rely on the official communication which came from the bank, which, by the way, is their statutory responsibility to do. It's part of the rules they signed, that as a listed company, to release information as to who is doing deals that is above a particular percentage, I believe 5%. And the bank has released that official communication to say, this is the gentleman that did this, that was on the buying side, and these are the investors on the selling side, and we just take that at face value.
Yes, FirstHoldco did confirm that RLC Investment company was the one that was the sole buyer for this off-market deal. But if we want to talk about Femi Otedola now, on Wednesday, I think, if I'm not wrong, we see that he bought more shares like the day before, maybe Wednesday, to move his majority holding in the company. And we saw that about, say, 40%, and that's, kind of solidified his holding as chairman of FirstHoldco. So that did happen.
Well, I mean, to the best of my knowledge, he's been buying in the market on a regular basis. Maybe it's not, I mean, as far as we know, he wasn't involved officially on the bulk trade that was done off market. But I believe he's been buying continuously. So this, shouldn't come as a surprise to anybody that he continues to show up his position within the bank. After all, he's the chairman. He needs to actually show commitment to the bank to ensure that his interest is aligned with that of the other retail investors that might have a stake in the bank.
Definitely. So how do you see this incident impacting on investor sentiment right now for FirstHoldco? Because we did see that rally for FirstHoldco this week, jumping 9%, really rallying, especially when they heard the news that Femi Otedola has increased the stake in the bank. So how do you see this news influencing the stock trajectory, the buy trajectory for FirstHoldco?
You see, the stock market's response to sentiment. And the rally we saw is actually the signal or that the market is sending that, look, it has confidence in the change in leadership of the bank. Somehow the market is expressing confidence that there will be better governance of the bank, as different from what we were seeing before. So, and that is why you are seeing the rally. Over time, hopefully the bank, with its performance, will justify the confidence that the market is expressing, through the rallying of the share price. So for now, I think the investor seems to be satisfied with the direction the bank is moving, and that's why you are seeing the rally we saw.
Okay, let's now cast it very briefly on what AMCON is doing. That they're still reportedly and not, confirmed by the agency in question yet. Well, we see them, selling off some of their equity stake from what the report said. What does that tell us now about the ownership of Fidelity Bank in terms of, when they sold that huge amount of shares and the direction Fidelity Bank is going? How strategic is this for Fidelity Bank?
Okay. Firstly, AMCON isn't supposed to be holding equities or properties for a long time. They are supposed to hold them, and when there is an opportunity to sell them off at market price in order to recover, monies, they are supposed to do that. And so they are not supposed to be a participant, if you will, in the management of the bank. Don't forget that they only got hold of these assets because through a process of trying to rescue bad loans. So if there's an opportunity for them to sell off those assets and get liquidity back, they would do that. And I will assume that that is what they've done now. The fact that we are able to get an investor willing to stake that quantum of money on that quantum of shares also is a positive indication for the growth trajectory for Fidelity Bank itself. Don't forget that 2 or 3 years ago, Fidelity Bank share price was something in the range of 4 to 5 naira. Today, it's close to 22 naira, which shows that the trajectory of that particular bank is upwards, and the consummation of this particular trade is another affirmation that investor sentiments towards that particular bank is positive at the moment.
That's actually good news to hear, because Fidelity Bank has been in news for not so good and not some bad, and some good news as well. So, but we hope that this is actually going to be seen as positive for investors and more stocks to come in the banking sector. But we'll take a quick break now. When we come back, Mr. Amolegbe is still in the studio with us, and we'll be delving into more macros and how that impacts the broader economy. Just stay tuned. Welcome back. You're still watching Capital Market Live on Channels Television. I'm Will Ibang, and we've been talking about the stories that made the news. We talked about Femi Otedola and the federal government denying any involvement in the off-market deals that happened, and also keeping up with, we're going to be talking about the macros. Inflation numbers came out this week. We saw it at about 22.22%, and that shows the continued downtrend for the third consecutive month. And this speaks volumes, but how does that really impact for businesses? Are they feeling, the impact of this lower inflation? And the people in the markets, consumers, are they feeling it? How is this trickling down to, say, end users and possibly the cost of a unit of a product, but also how does that impact the stock markets and how investors are willing to buy? How much more are they going to buy? So we're going to be delving into that with Mr. Amolegbe. He's still in the studio with us. Mr. Amolegbe, this is big news. We see 3 consecutive months of inflation drop. That's the report from the NGX, 22.22% in the month of June. So how are investors, how are businesses really feeling the impact of this inflation drop? Is it reflected?
Yes, I expect that it will reflect going forward. It's the fact that we've had three consecutive months of lower inflation rates is good generally for companies that are quoted in the market, because it obviously means that ultimately their cost will be lower, and hopefully that will ultimately lead to lower interest rate. Don't forget that one of the overarching reasons why the MPC, that is the Monetary Policy Committee, have had to continually raise interest rates over the last few months is in order to try and get a handle on inflation. Now it's possible for them to start looking at it as, well, it's very possible that some of the measures they put in place is actually having a positive effect, since we've started seeing a steady drop in inflation rate. So we could get to the point where they now feel they've been able to curb the rates of growth of inflation and start possibly considering lowering interest rates. Okay. A lower interest rates will always be positive for production companies because their finance cost, starts to come down.
Okay, we're talking about finance costs. We saw the report from CBN about last month saying that companies have been absorbing the cost and not passing it on to the consumers. So how is this making it lower for the companies? Is this, and it's, from what is said, it's quite unsustainable for these companies. So how is this going to really, how does this really tell us the real picture of inflation if companies have been absorbing the high cost of inputs and possibly trying to lower the cost for the end users?
Yes, we've seen for companies that are producing products that are, that have elastic demand, they either find a way of absorbing those costs, or it's going to be tough for them to remain in business. But for some of the companies producing products with inelastic demand, they've been successful in passing off some of the costs, maybe not all of it, which is the reason why you've seen the price of some of their products and services haven't gone up. However, it is expected that this is a momentary thing. It is not going to last forever. The hope is that with time, as we see inflation trend downwards, the ability to actually recover those costs, increases, and they are able to get to the point where most of those companies are able to operate, profitably. But it's true that not all the companies will necessarily be able to pass all the inflation cost over to their customers.
Okay.
Because the truth of the matter is that the purchasing power has been affected greatly by the sudden rise in inflation, and income have not really actually grown to meet the increase in the prices of products and the inflation we've seen. So, in order to stay in business, you just have to find a way of cushioning that to ensure that your volumes don't drop. All right, because if your volume drop, then you are looking at massive drop in profitability too.
Okay, so we have the MPC meeting going to take place next week. What is your outlook for that? Taking into consideration the IMF is updating their forecast, their growth forecast for the global economy, and also taking into consideration the dangers of the trade tariff, wars that we've been seeing globally. How is that going to impact or influence CBN's decision next week?
It's certainly the tariff war or trade war, if you will certainly play a part in the decision that the MPC eventually, announced down on Tuesday. But beyond that, basic local issues, basic macroeconomic issues, local macroeconomic issues will also play a significant role. We've mentioned the issue of inflation starting to come down. We've seen a bit of stability, if you will, in the FX rate, and so while food prices are still relatively high, it is expected that seasonally they will start to come down, as the harvest season approaches. But while I do not see a situation where we end up with the MPC jacking up rates significantly again, we might not have gotten to the point where they actually start dropping rates.
Okay.
So at the end of the day, I'm foreseeing a situation where they retain most of the parameters at the current levels.
And so it's a hold for you, Mr. Amalike?
Most likely.
So we'll look out for what the CBN MPC will do next week.
No problem.
And definitely that's a wrap on Capital Market, this edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch us again on our YouTube channel, on Channels Television. I'm Willie Bong. Thank you for watching, and I'll see you next week.